What's up? What's up? What's up? Friday. Hope you guys are all having an amazing day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Glad you're able to make us in and join us today. We've had a little bit of a roller coaster of a week where we saw some pretty nice, strong rally early in the week. Last 2 days, we've come down pretty hard. We've had some pretty strong move down, but some decent reversals in some levels. So I did not do the live trade room yesterday. That was done by Justin Krebs. So I've pulled some lines off the charts. So we're going to be resetting a couple of different levels and taking a look at a couple of new zones. So if you're new to the channel, do me a favor. Click the subscribe button, hit the notification bell down below. If you're a regular returning viewer, hit that little thumbs up icon. That means a tremendous amount. And share this out with others. I know a lot of you are members of trading groups, or maybe you're on a dedicated trading page on Facebook or Twitter or whatever. I'd love it if you'd share this link out so that other people can kind of know what we're doing every day. We're trying to do these every day on Fridays at 7 o'clock, or every day at 7 o'clock is my goal to get this thing rolling. All right, let's go ahead and share my screen. Let me shrink my face. Let's get started this morning. Okay. So our ES this morning, we are up half a point. We're basically flat from yesterday after the big sell-off that we had over the last few days. Now, looking at that sell-off, when I go to the 4-hour chart, we had this momentum kind of rallying up, and I thought, okay, we're gonna continue our upward movement. We were not able to get above that 34 quarter level. That was really that next line, if you will, right? That next piece of strength. And we went over this actually on Wednesday when I pulled up not that one. When I had pulled up that zigzag indicator on 0.5%. And I had said that, sometimes that zigzag indicator is pretty good because it lets you see swing highs and swing lows pretty cleanly. And what's interesting is that we'd said, well, technically, if you had wanted to consider a swing here and a swing here, but in reality, we still hadn't put in any sort of a new swing. It helps me to kind of define where those swings are. Well, if I'm looking at this, we can see that basically I've got 3 of the same swing lows. And so what we thought was going to break us out of here for some swing trading opportunities. Now, it did give us a couple of short-term swing trading opportunities, but now it's really, really sideways. Right, we're inside of that range. And so looking inside of this range, I think we're going to be better off looking for short opportunities today than we are looking for longs based off the setup. So I'm going to come back, as of last night, we saw a really big sell-off off of this area. This is not a great time of day. Matter of fact, it's a pretty terrible time of day. But it's a very clean zone. So that's a rough time of day, but pretty clean zone that we could get a reversal off of that level. So I'm going to keep an eye on this. I will tell you, I'm going to be very particular about basing if we make it into that level. Now, I will say that's 30 points away from where we are right now. So if we make it up to there, that from 33.50 to 33.80, that's 30 points. So that would be really going against that would be really trading against what's been a strong bullish day if we make it up into that region. So just understand that you'll be going kind of against the daily momentum, but it still is inside of our bigger picture trend, which is very sideways. Remember, when you're dealing with that bigger picture trend, you always have a slightly lower degree of probability when looking at where would I see those particular turning points. Now, on a 4-hour chart, I will tell you that it's setting up for a pretty clean candle-to-candle setup. All right, you're setting up for a pretty clean candle-to-candle style of a trade. We'll see what this candle, which is being, this candle's not done. You have to wait until this candle is printed. And so, after the 8 o'clock hour, we'll see what this candle looks like. But you could have a candle-to-candle short opportunity set up based upon, does this look like a reversal pattern on the candlestick? If we continue to come down as far as demand below us, I think that your next best level is that hourly level that we've got identified in there. that hourly level, which was from over here on the very far left of the chart. We're looking at this move up back in here as really kind of the next best thing, if you will, for price to come up. Now, could we have a breakout up to that level? If we get enough quality basing right here around 33.65, you could get a trade up to this region, but I would need some quality basing. All right. So that's our ES levels. Like I said, not a whole lot of phenomenal areas out there to lean on. If you don't like this one, you might like the one that was formed at the end of the day yesterday up in here. This little wick over wick right here formed at the end of the day right at 3,400. I wouldn't be upset at you if you decided to trade it this way, which is a confirmation entry on the first one and then a limit entry on the second one. That would actually get you in right at yesterday's pit close for that short. But once again, now you're looking at trading against the 50-point up move today. And so I'm okay with either one of those levels, but just be aware that it would be against kind of that daily market. So, yes, thank you. On Wednesday, Olsey, not yesterday's pit close. That's Wednesday's pit close. Just about. All right, not quite. It's actually a little bit before that, but a little bit before that. All right, so in the NQ in our Nasdaq level, now we had a this little area here from our Wednesday session that wound up being a nice like 3-to-1 kind of move up, this little intraday zone, and then we saw that old demand became new supply, old support became new resistance, and really sold off of that pretty hard. Well, I'm going to leave that area basically in place, but I'm going to wrap my lines around this one up here. And that is, I think, a very clean zone. That one's really clean off of the Wednesday close. Now, it was the start of the move down in the Globex there, and which was yesterday basically a full day of bearish price action. And so that was I think that's a super clean level that similar to the S&P one that we had just talked about. And then there's that little wick over wick right here. So basically the same setup in the NASDAQ as you have in the S&P. If you want to be more conservative, you could use the first level as a confirmation entry, the second level as a limit entry. Joe, I think that the NASDAQ is actually a cleaner when I compare the two together. So great question. When I compare the two together, I think the NASDAQ is a bit cleaner, but the levels are just about identical, right? I mean, if I put them all right here, they're just about identical. So this is one of the great things about micros. You could just take both at the same time if you want to. You could take them both at the same time, utilizing micros and keeping your risk the same, right? I think it's actually a pretty good strategy to take both when you have both of them lined up just like that, and that's kind of what we have in here for today. So, in that NQ, if you get a pop up from here, you've got the opportunity to get long on a breakout. I think that this one actually is a better setup if you want to try the long, because we're getting a little bit more basing right here. So I'd be okay with a little bit of a breakout up in this region. So if we think about which one is the weakest market, that's going to be relative to time. In the overnight, the S&P is a little bit weaker. The NASDAQ is a bit stronger in the overnight sessions. Over the last few days, if we look at the last couple of days, major market comparisons. There it is. I was going blind. Just look at the last week. Over the last week, the NASDAQ is actually weaker. So if I just pull up the last 5 days, over the last 5 days, the Russell's up 2%, the Dow's up 1%, the NASDAQ is down 1%, the S&P's up 0.19. Let me slide that to the actual indices. Or sorry, the actual futures markets. So over the actual futures markets over the last 5 days, the ES is up 0.43%, and the NASDAQ is actually down 1.04%. So in the overnight, the most recent overnight session, the NASDAQ is stronger, but over the last 5 days, the NASDAQ is actually weaker. Next, the Russell. So in our Russell level, I left this level on here. I know it's already been hit, and we got a pretty nice move away from it, and then we came back to this wick over wick. The reason I left this level on here is because if I look at the rut bounced off of our 15-minute demand and came to this wick over wick supply right here and then sold off from it. So when I look at the Russell has been the strongest of our markets. So I'm not going to actually lean on any of these shorts on the Russell. I'm actually going to look, if I'm going to go long, the Russell would be probably the better market to take along based on our most recent moves over the last week, right? Just over the last, I'm just using the last 5-day setup. Also, we have the same levels in the Russell that we do in the other markets, which is this area of supply right here. And this one here, that's the same two levels. So we're still kind of below those. So if you're looking to go long, I think that if we get basing right in here, and once again, I would need basing to happen right in here. And right now, I certainly don't have that. It's still a little bit too far away. If you want to get more aggressive and just go long above the Globex high, when we get above this 1539 area, that's a much, much more aggressive style of a trade. And what you're essentially doing is you're taking the long on the 15-minute breakout. If you wanted to take the long on the 15-minute breakout, I ain't going to be mad at you. I'm okay with that trade. Just know that your probabilities of being right are a little bit less, right? Your probabilities of being correct are a bit less. But you may be able to pull a very nice, quick 2-to-1 trade out of there, especially if we're sitting right at an area where, okay, if I can bump it at 1540. You could even trade it from 1540 just up to 1545 for a 5-point day trade. I mean, can you make a fair amount of money? Can you do okay on 2 contracts at 5 points in the Russell? Is 5 points on 2 contracts a decent day? Not such a bad day if you really want to do it. But just understand that gives you about a 1.5 to 1 reward to risk ratio. Okay, because your stop would have to be at the tightest below 1534. Okay. So that's the downside of that is, do I have enough reward to justify the risk? All right, last is the Dow. The Dow Jones on a 4-hour, if I take a look at the 4-hour as well as with the other markets, we are seeing that our upward move didn't really pan out and go all the way through, but our downward move isn't really dying. And so I would look to this to say, all right, if we break below this little trend line that's created here, then I think your next move down is to 27,000. So with that being said, now why do I say 27,000? The reason I say 27,000 is because you've got all of this resistance back here, and that resistance is just above the whole round number that is 27,000. Now, technically, your next best level of demand isn't until 26.8. So, this is actually setting up that what might happen because we're heading into a Friday. So what are our rules on trading futures markets on a Friday? Right? Just keep that thought in mind as well. We've got very, very specific rules about how we trade futures markets, specifically regarding a Friday. And that, I think, is going to govern a lot of what you take a trade on today. So if you want to take a trade on these positions, very good, Liz, we're going to exit before the end of the day, or we're going to hedge our positions. Exit before the edge of the end of the day, or we're going to hedge our positions. So yes, and quad witching day. So you've got expirations coming up all over the place, right? And so I think that there's a chance that we could do a gap over the weekend. Now, if you have never used options on futures, if you've never used options on futures, if you're watching this on recording and it's something you are unfamiliar with, if you go to the website and you go to OnDemand Courses, it's actually underneath free trading videos. So go to OnDemand Courses, free trading videos. We have a class there specifically on hedging using options on futures. It's called Combining Options with Futures. We did it sometime last year, so it's a very, very good course to take a look at, just to give you some ideas about some basics of options on futures. Okay. All right. So this is those are my equity markets. If you've got any questions on the equities, let me know. But for now, what I'm going to do is I'm going to share this grid. And copy and paste this in here. All right, so that is in there and ready to go. I'm going to share this into the trade feed. So give me just a moment to put this in here. I just saw on the news we have a yet another fun tropical depression coming to the Houston area, so that's going to be great heading into this this weekend. So we'll see what that does with the weather. Oops. All right. Sorry about this. I have to recopy and repaste this. Yeah, tell me about it, Liz. It definitely gives me a little bit of agita. All right. Let me do this one more time. I didn't copy it. There we go. All right. Next, let's go to bonds and currencies. Oh, excuse me, commodities. Let's go to commodities next. So crude oil took a jump, didn't it? So we got a really nice jump up in crude oil. Not overly surprised in the fact that we got a big jump in crude oil the last few days. We had talked about some. I know, Liz, they're running out of letters. I think that they're soon going to move to Roman numerals. No. We had talked about some demand areas down here as prices were rallying up, and then even breaking above this region here, and price did come back up to that 40. I wasn't even sure if we were going to make it to 40 by the end of the week, but we did hit it by the end of the week. And matter of fact, way surpassed it, got as high as 42 on that in crude oil. So looking at crude now, which, by the way, I actually wanted to give everybody a quick heads up. We're going to do our next Traders Summit. For those of you that join us regularly, our next Traders Summit is going to be on October the 1st. So I'm going to try to get a video out later today announcing that. We've got a commodity and energy markets expert who's going to be talking on that summit. So Mr. John Rowland is going to come in. He's going to talk a little bit about some of the foundational keys to trading specifically crude oil and natural gas. He was a floor trader in crude oil and natural gas for many years on the I think it was the NYMEX. But he's a great dude. Some of you may already know him, and so he's going to be one of our guest speakers at our next one. But anyway, so John's a good one to hear from, especially when it talks to that piece. Looking at our 4-hour chart, we obviously have an upward trend, but I really like this area right here on the 4-hour. That's a really clean level on the 4-hour. Well, Kurt, I hope you get to be in the mountains. Hopefully it's a good time in the mountains. Yeah, we always record those. Those are always archived. This is a clean area on the 4-hour chart. I mean, it is super clean on the 4-hour. It doesn't really set up as clean on the 1-hour level, but it does on the 4-hour. Now, my only downside with this on the 4 hours that we came pretty close to it in here. So the 4 hours not really though where I determine is not really where I determine trend, right? Not really where I determine zones. The 4-hour is really designed to determine trend, and so I'm not going to have that zone on there based upon the 4-hour level. Andrew's talking about the fact that we're coming out of a daily area of supply, and that is the case as we have this wick over wick area here on a daily supply zone. So I think that our line of pullback on the hourly chart, that daily supply, when we look at that, if it gives me a pullback from 42 to 40, that's going to be a pretty good healthy pullback. And when I move this to the 15-minute, I've got a decent little reversal area here right at 40. So why don't we take a look at 40 as right there as a potential reversal. Now, mind you, that's a 15-minute level of supply. Demand, 15-minute level of demand. And we've got a really small little supply level up here that we can use to maybe make it down to that region. So I could see a short leading then into a long, and we'll see if we make it up into this here in the next few minutes. So keep an eye on that level. I'm going to throw a quick alert on here so that I know that if that gets triggered. Gold is still in between our zone. We should have I know a couple of you are still in the GLD Iron Condor that's expiring today. So if you're in that GLD Iron Condor expiring today that we put in the trade feed, then that one should be working out exceptionally well for you. So in between there, though, there's really not a whole lot happening. And so on the hourly chart, you do have this level of supply. Oops, that's not what I wanted. This level of supply up here, 1966 by 1969, and that's formed, at the very beginning of a Globex session, the end of the day. Not the greatest level to take a look at, but also not completely terrible. If I go a bit lower, there's nothing down here that makes me excited about demand to get long, and so I'm going to leave this one here as my best level of supply. Although I wouldn't be surprised to see us just retest the Globex high and reverse off that Globex high. But this Globex high actually sets up a pretty good bull trap for a lot of novices who are going to get long just above the Globex high, and then there's a supply zone just above there. Nat Gas. So Nat Gas, we had our breakdown trade. Our breakdown trade really has hammered down after the inventory numbers. It got even stronger with the big move down. And so when we go look at Nat Gas on a bigger scale, look at that son of a gun. Woo-wee. We had a huge move up in Nat Gas where it was like nothing could stop us. We were going to the moon. And then reality set in. And I think the correct phrase is, ay caramba, it came down hard. Now, we have a demand zone here. We're obviously basing in front of this demand zone, so I'm not going to lean on that demand zone whatsoever. As I look a bit higher at our supply areas, I've got a little wick over wick right here on the 1 hour, and then this area right in here as both retest levels. I also think that you could have a breakdown from here right at this zone. Now, I will be looking on Friday. I will be looking on Sunday night at a gap and go scenario. To me, this sets up really cleanly for the Sunday night gap and go trade. All right, copper. So in our copper level, this was frustrating. We did get our basing in front of the copper level. Price popped above, and then 6 candles later, 1, 2, 3, 4, 5, 6, we were exactly where we started. And so it was a 6 candle rule that says, if you're following the 6 candle rule, it tells me to get the heck out of Dodge. Based upon that, and that we fell from there, I'm going to put a level right here of supply. As far as demand below me goes, you don't really have any super clean demand to get long. Even on the 15-minute, I don't have anything that sticks out. And so if we retest this hourly supply, I think you've got a good short opportunity for price to make it down at least to this 3.04. All right, let me move over to bonds and currencies. I'm running out of time here real quick. Oh, let me share my commodities page. Yeah, Nick, there's definitely some seasonality there in nat gas, no doubt about that. Seasonality does come into play with that piece. All right. All right. So let's move to the next chart, which is our bonds and currency markets. Oh, you want to look at ZS? Yeah, no problem. Tushar, commodities. Let's go to soy. So I know we had a couple of levels in soy. Like I said, I moved a lot of those lines off. And looking at this on our 4 hour, we're clearly in a 4 hour upward trend. If I go to the weekly chart, we have a straight up move. And I went through the weekly chart because I wanted you to see just how parabolic this move has been over the past 4 weeks. Now, we are coming to weekly supply, right? So it's been a parabolic move straight up, and we're sitting now in weekly supply. Doesn't mean that it's going to reverse, but I wouldn't be overly shocked to see a bit of a pullback from that area. Now, a bit of a pullback doesn't mean that we're going to come crashing down and that all the gains are going to be erased. A bit of a pullback could just be to here. And that's a little unbalanced wick over wick above a pivot low. And that pullback on a daily chart would look like just a move down into this region here. It may not even be enough of a pullback. So on the daily, you've got actually a better level down below there, but that on the hourly is really, really wide, right? So when I'm looking at the 4-hour chart, the 4-hour chart is just showing me my trend identification continuing to move. I just wanted to show that weekly and the daily to show, okay, we may get a bit of a pullback, and if we do, I think your hourly level that makes the most sense is this one down in here, right at that wick over wick. All right. Corn is actually not quite as strong. When I look at corn, it's been a bit weaker, but it's still also, very, very bullish overall. When I look at the 1-hour chart on corn, my best level that I look at doesn't come into play until way the heck down here, but it's a good one. It's a goodie. It's a goodie right there. All right. Bonds and currencies. So we're going to see a lot of these. A whole lot of nothing is what we're going to see. So in the ZN, a lot of sideways price action without price really giving us a whole heck of a lot, and really not a lot going. And so when I look at this, it doesn't really give me one direction or the other. So I'm going to leave this thing be yet again. I haven't had a trade in this in a week, and I'm going to continue to not have a trade as long as we stay inside this super tight range. In the Aussie, so in our Aussie position on our 4-hour chart, we are still definitively given a good solid trade direction. What's our definitive trade direction that's given to us in the Aussie? This is like a hamster wheel of death is what this trade is, right? This trading the Australian dollar in this market is like the hamster wheel of death. Are there trades? Sure. Might you expel a lot of energy? Sure. Might you go nowhere? Yep. Only because it's so sideways. And so with that, and I don't know where the hamster wheel of death came from. If you want to go on a very small time frame, for those of you that are day trader styles and you're really looking on very small time frames, you definitely had that we sold off pretty hard here at this 5:45 candlestick, 6:15, 6 o'clock a.m. Central. But that, I think, was a bit of a retest of this area here. I think that was a retest of this zone right in there. So I don't know that I would lean on that a second time. There's a little wick over wick that was created right in here that actually might be worth leaning on, but that's all I would go in with. I think that your reversal levels are going to be a little bit harder in this market just because of our overall sideways trend. But once again, the hourly wick over wick, if we keep going down and we have a stronger move away, this little wick over wick area here, which is the same one that we just looked at on the 15, might be okay to kind of take a run at it. In the euro, I'm going to this wick over wick right here on the demand side. That's the one that sticks out to me as my best level. Now that's a little bit far away from current price, right? But we do have basically whole round number support there. Not whole round number, but 1.18. You're going to have a lot more probably buys right in there. It's also a wick over wick above a pivot low. Now, technically, you want your stop to go below the pivot low. But if I go to a 15-minute chart, I would then have to say that the absolute tightest my stop could be would be down here at 777, right? 1.7777, 7777, somewhere in there. Joe's talking 1845. Do you mean 184, Joe? 1.1844? Okay. So you're talking this demand right here on the 1-hour chart. Yeah, so that would be this one right in here. Yeah, so that little level, you're correct. That is some decent area of demand. The only thing I don't love about that area of demand is that we wicked down, came back up. We've wicked down, we've come back up. And so we're getting a little bit of basing that might be a little close to that area. You certainly can get at least a 1-to-1 out of there right now, and possibly even a 2-to-1. So while, yes, I agree that that is a small area of demand, and if you wanted to take that one, just make sure that you are very quick in moving your stop. That's what I would say with that one because of the basing right above. Remember, for me, basing is going to be that kiss of death. All right. Going to the Canadian dollar. Our Canadian dollar, we had that little demand area that popped through, gave us a good run. Canadian dollar's also given me the same sideways price action. Remember, all of this is governed by what is the dollar doing. But at least on the hourly chart of the Canadian, we have, I think, a cleaner little supply up here, 79.56 by 759.56 by 759.96. This little area up here where I think you may get the better reversal if price comes back into there. Great British Pound. Let me remove this one. We got a nice little bounce off of this zone, and then a second time into it, we came a little bit below it, and so now on the 4-hour, we are actually coming up a bit. So whereas this was our strongest one coming down, it's actually gained a little bit of upside momentum. I'm going to remove the hourly level of supply above us, and the reason I'm going to remove that level is because we hit it once and got a great move away. We came close to it this time, and we got to move away. We came close to it again. So what does that tell me about this level if we keep coming close to it and we're basing right in front of it? It tells me it's got limited probabilities of working out. And so with that, I'm going to remove it, and I'm going to put a potential breakout line above 1.3, right? Just above this 1.3 then becomes a potential breakout line where we could see price move and then hopefully trade a bit higher from that area, from that zone. Okay? And then last is Japanese yen. So that dang Japanese yen, boy, is it running up over the last few days. Strong move up. The force is strong with this one. As the force is strong with that one, we're sitting just below this area, this line of resistance. Now that line of resistance technically could still act as a supply zone right up in here, and we could see a little bit of a pullback. Now understand that if you get long on there, your probabilities are a bit lower, but that pullback, if we get a pullback off of this, I'm going to remove there because I don't really, if you get short off of that, I don't necessarily want to get short off of it, but if price pulls back from there, it might get me down to this region here, which in the overnight was the origin of a very strong move higher, and that would be our next area of demand if we get a strong enough pullback. Technically, if you go a little bit smaller, you've got this 15-minute region in here that actually might still continue to hold and serve as a pretty good trade idea. All right. So those are all of our markets for today. A fairly quick run through today as we don't have a whole heck of a lot setting up. I actually got a text this morning from Justin. He said I'm looking for trades and I don't see any great setups. How about you? And my answer to him was, nah, not really. I mean, Justin and I both said that there's not a lot of great setups today. That was quite literally the text that he sent me at, what time was that? 6:52 a.m. So he sent that to me, and that was his thoughts. And I think that we're not alone in that thought. Is that the setups today are not going to be the greatest. And now heading into the weekend, but just remember as we talk a lot about, just hedge and protect those positions over the weekend. If you guys have any questions, shoot me an email. Let me share with you the bonds and currencies grid. All right, so that is in for y'all. And it's in both spots. All right. So if you guys have any questions, make sure you send me an email. My email address is chuck.fulkerson@tradersarmy.com. I will type it into the chat box. So that you can reach me if anything that you want. If you guys are watching this on recording, those of you that are watching the recording, you can pull up the chat and get all the information and all the things that we put in the chat box as well. Do me a favor, if you are watching this on recording, leave a comment in the comment section. Tell me what you think about doing these on the live session. And remember, October 1st, mark that on your calendar. We'll have the announcement coming out later today. We've got a couple of really cool guests that are going to be presenting on October the 1st, and so that'll be a good time. So, all right, everybody, I'll talk to you soon. See ya.